Hello and welcome to the week ahead from here in beautiful sunny California. It's currently 3:17 p.m. on Friday, August 1st, and we have some change in the market. Can you smell it? I can smell it. I'm pretty excited about it because change is good. It means there's probably some downside in the future, but I'm going to get into all that in a minute. I had so many things I wanted to talk about this week that I thought of for the weekend video, but this has happened. So this is number one. This is the most important thing to talk about. And I need to also mention a little bit of housekeeping. I'm going to be away this coming week, and I will not be able to make a video next weekend. So there will not be one coming next weekend because I will be traveling. So let's get started. So this week, what do we have here in the daily time frame? Well, what do you see? The blue line is the daily EMA 12, and we've been holding it until today. Today we gapped below the EMA 12 and closed even lower. So this is change. This is different than we've seen since the last close was back here on June 20th, which is how long ago? 42 days ago, 42 trading days. That's a long time. And the last time we actually closed below it with any sort of significance was way back here. And that was 107 days ago, trading days. So that is a long time to be riding an EMA. And there have been many names doing this, some going hundreds of percent above where they were at the lows there. So this close here is significant, more significant than anything we've seen along the way since back here. So my anticipation going into the coming week is that we will be seeing some further daily consolidation, even if we rally from this point, which we totally could. I would be expecting a daily lower high from here, and then continue downside for a weekly higher low. Technically, if we had a low that was even an inside week, or if we had a week that was an inside week next week, or it went slightly lower, that would be, that could be a potential weekly higher low. I'm going to be watching weekly EMA 12, this dark blue line here, not the 50-day, to see over time here how do we deal with that. As you can see here, on those weak pullbacks over here, on the weak time frame pullbacks back here, it tends to be a spot where you can find support. So I'm going to be paying close attention to as the weekly EMA 12 rises, because we have 12 weeks back here that it's got to catch up with before it starts to curl over, and price begins to oscillate somewhere around here or come deeper or whatever. I'm going to be watching for that weekly higher low on the daily time frame. I think daily EMA 12 is broken. Going into next week, the very first thing I'm going to be looking at is how much follow through do we see for the bears, and then when we do ultimately get a bounce, where does that bounce top out, and sort of what is the range percentage that we're going to get there. So specifically, I'll jump out to the 30-minute time frame because that's where I'm seeing a lot of clarity here. This is the 30-minute EMA 12 that we have been riding steadily down since we topped out here on Thursday morning. And I'm going to talk about this whole move here in a little bit, but I need to see, is this 30-minute EMA router going to continue to hold into next week? Like, are we going to gap down into the coming week, or are we going to bounce up out of it? If we do bounce up out of it, I'm looking at the retracement size. And with my bear glasses on, I'm looking at this thinking to myself, okay, I want to see it, if it was going to bear a flag, you wanted to see it hold somewhere down here below the 382 retracement and then go deeper. If it goes higher than 50% retracement, then there could be some consolidation that happens and then lower. Or if it goes all the way up to the highs, obviously that means that this meant nothing and we're going to continue higher. But because of the size of this retracement, look how many days of trading this wiped out. 28 days of upside erased in 2 days. The size of that retracement is significant enough that now we need to see when we bounce, where do we bounce to, and that'll tell us what are the odds that we continue then higher afterwards, or we continue lower, or we go sideways for a while and consolidate. We'll have to wait and see. But that's how I'm thinking about it. Okay, so I really wanted to focus a little bit on what happened in the week leading up to this, because obviously we've been riding that daily EMA 12, and this has been something that I've been watching week after week. We've been talking about it, how as long as the daily EMA 12 holds, as long as daily higher lows are being set, the bulls are in complete control. And I'm going to keep the extended hours on here so you can see what I'm talking about. But what I've been learning, I feel like this week I had sort of a master course in new understanding of how all of these things happen, and how emotions and news play a part in these changes happening in the market. And I've seen now 2 occasions where a trader has done incredibly well, making very, very big profits based on this concept of emotions and news and putting traders offside in their positioning and forcing them to make moves that they didn't want to do. And so I'm going to talk a little bit about what that is. And I wanted to also mention that this morning in the Chart Guys community, I was answering a question about how we would be thinking about potentially buying a dip today after the gap down. And one of the things that I mentioned was that I think today's price action is going to be something that I'm going to be screenshotting and making notes of, and because I think it's going to be something that I'm going to want to remember and think about for a long time. I was more right about that than I could have imagined based on the things that I learned today. So I want to describe to you what those things are. So another community that I'm in is called Steam Room Trading, and there's a bunch of fantastic traders in there, both from the people that run the community side to the people that are in the community side. This group of traders is quite different than any I've ever really encountered before. And one thing that I can say about them is they definitely put their money where their mouth is, and they have very big wins and sometimes even very big losses. But what I want to talk about was Sang Lucci, one of the main guys in the room, talked about some trades that he had made and what led his thinking into this. So I felt like I learned a lot from him describing it, and what I'm going to convey will not come across as good as what he did. But I want to give you a little bite-sized micro take on what happened and how he thought about it and what that means for me and how I'm thinking about it going into the future. So essentially, what he's talked about is, let me just describe what happened here. So we've been in this slow grind up, relentless grind up market for weeks and weeks and weeks and weeks. And here on this day, that's Wednesday, the 30th of July, 2025, there was an FOMC meeting. And after the FOMC meeting concluded, we dropped pretty sharply and broke the lows of prior day. And this put a bunch of traders offside thinking, oh, this is bad news. We're going to need to be getting short here. And then there was a rally into the close, but not a significant one until after hours, when what happened in after hours was Meta earnings and Microsoft earnings. And when Meta and Microsoft did their earnings, let's jump over to Meta. This was the result of Meta's earnings. Meta, which had been in a slight consolidation mode for a long while here, and I even tried to get long this before the earnings, and I couldn't do it. And it shot up 13% on those earnings. And Microsoft has been in a steady move up this entire time, no rest at all, moving up and up and up. And then also had a huge rally off their earnings. Look at that, one 30-minute candle had them up like almost 10%. And so those two earnings alone, I'm sure there might have been other good earnings too, but those two alone were enough to send QQQ and SPY soaring higher and gapping up overnight. And so all the traders who, based on the FOMC news, were getting short, thinking the market might be going down from here, now are pushed offside, right? They're on the morning, especially if they're trading options, they by the time this stuff was happening, they might not have been able to get out of their options. So they come up in the next morning, and the first thing they've got to do is close out their long puts and at a loss, at a pretty significant loss. And at that point then, I think everybody coming into this market on this morning, based on this huge rally out of the depth of despair, which has basically been what we've been doing this whole time, it's been modus operandi for the whole market, is every time there's a big dip, it gets bought and shot up. And so all the people here, they wake up in the morning and who are still long, they're like, yeah, right on, bought the dip, it worked really well. Everybody here who got short is in the other boat where they're like, oh my God, we're screwed, they did it again, we got to get out. And then right off the open, with all the sentiment reversed, the people who got short and now are wrong, they're not going to get short again. They're trying to cover their shorts. The people who got long are like, oh, we're super bullish, let's buy more. So they start buying the dip and it fails. And now they are caught offside, right? All the people who covered their shorts and people who covered their shorts and the people who tried to get long are now in trouble. And we get this steady 30-minute downtrend that leads right down to below the lows of prior day in that trading day. And at that point, people are forced to really think like, oh, this is bad. I might have to get out of this again. And then we get another gap down. And so all those longs who got long anywhere in here who were trying to buy the dip again, now they're screwed and they've got to get out of those longs. And anybody who was short up here and realized, oh my God, I was right, I can't believe I got out, they've got to get short again down here. So that's what's driving this move. And it's all this play on things becoming offside. And it's really also based around news, right? The news that pushed the market down here was FOMC. The news that rallied the market out of that was earnings. And then, ultimately, why did this go down? Well, I think that actually Microsoft to me is the key, but we've been in this market mode of slow, steady, relentless trickle up, right? And everybody's kind of aware that everything's getting so extended. How much further can it go? And to me, the bellwether, what happened on the morning of Thursday was Microsoft. Okay, so Meta, if you looked at the chart, held up. It sort of balanced here at the highs, but Microsoft dropped. It dropped relentlessly, just kept going down and down and down and down. And I had a terrible trading day because I was one of the bulls that bought the dip thinking that this is going to go up. And I was looking for a little bounce, and it never came, and I ended up taking a really bad losing trade on this one. Because you can't see it on this chart, but if you zoomed in, it made like it was going to bounce, and then it would fail, and then it would make like it was going to bounce, and then it would fail. And so I actually, stopped out a few times on it, enough to have a really bad day. And I feel like this lesson is now learned very well by me, because I was one of those traders who did the thing I just described, where I was trying to buy that dip and saw it as a great opportunity, not accepting that the news was going to drive things in the wrong way. And then what do we get in the after hours that led to this drop? Well, we had more tariffs being imposed on stuff, and the orange man doing all kinds of funny stuff today that kept the market going lower and lower, including firing people that were giving him bad numbers, like the numbers were their fault on jobs numbers. So I digress. News pushing things offside, people getting in the wrong direction, and then forced to take action that they didn't want to take as a result, and then forced to chase as a result, is what leads to this kind of thing. And we've seen this before. If we zoom back out, let me go to a different day. Okay, so back here on July 15th, we had a gap up in the market though, from some news. And on that gap up, after going sideways for a number of days, like a better part of a week, on that gap up, we had news, or we gapped up on news. And everybody, of course, here is celebrating. We're all super happy. And all the bulls are like, yay, and start buying the dip again. And the dip doesn't hold. The dip goes further, and then lower high, and then lower again. And then we get some bad news that drives it down to the close, and then tries to rally lower. And now we're in panic mode. We're heading right down sharply on this move. And there was news driving this too. And then there was news at the very bottom of this move, right where it matched the bottom of all these days of trading. There was more news that came out. And I can't remember for the life of me what the news was, but it pushed it back up. So here you get people who are super excited and elated and euphoric, and anybody long was super happy. And then all the doubt starts to creep in, and then we get news pushing it lower, and people are starting to sell because they feel like this news is really bad. We got to get out. And then boom, rally out of that hard. So it feels like this is the thing, is these emotions putting people offside, forcing them to make decisions that they don't want to make in terms of their positioning. And then that's what drives the market in one direction or the other. Okay, the last thing I'm going to show here today is what I feel like was my best trade of the week, which happened here on Friday. Off the open, I was kind of expecting it on this gap down to continue lower based on everything that I'd been learning in the steam room. And so I actually had a short right off the open that did really well, but that's not my favorite trade of the week. My favorite trade of the week happened after the drop on the open. So I was watching SPY, QQQ, NVIDIA, and Tesla. And the reason I was watching NVIDIA specifically and Tesla specifically was because within the QQQ Magnificent 7, they were the strongest, relatively speaking, the strongest names since the open. I have another indicator that I've been working on that I haven't released yet that shows me the Mag 7 and how they compare relatively to the QQQ and each other. And you can use that indicator to compare other things as well. So for example, I have it showing me the Mag 7 versus QQQ, and I also have it showing me the 11 sector ETFs versus SPY. And that way I can just quickly at a glance see what's the stack ranked relative strength or weakness since the open of those symbols versus their parent ETF. And so I was looking at NVIDIA, seeing that it was the strongest, relatively speaking, right off the open compared to everything else. And I thought, okay, if I'm going to look for relative strength, on a bounce, I should pick the strongest one. And so here I was watching, let's actually put this to QQQ. There it is. I was watching QQQ and NVIDIA, and I was also watching SPY, but for the record, we'll use QQQ as the example. And so what you see here is watch my vertical crosshair here as I navigate across, because these charts are perfectly lined up, right? So here you can see all the move down on Thursday that happened on both. And then here we gap down on both. And then on the open, this is the 2-minute chart. And I think I was actually on the 1-minute time frame, but it doesn't really matter. The point you'll see pretty clearly. So we have this drop on NVIDIA that hits a low right there. There's the low of days so far. And at the same time here on QQQ, there was the low. We got a little bounce, right? And it's a more significant bounce here on NVIDIA. Again, the relative strength. And we actually get to the 2-minute EMA 12 and we touch VWAP on that bounce. Meanwhile, down here on QQQ, we don't even get to the 2-minute EMA 12. We get nowhere near the VWAP, and then we go lower. What happens while QQQ is going lower? NVIDIA goes lower, but it sets a higher low. And so I was trading this. As soon as we broke the high of this candle, I got long NVIDIA, and it had some chop in here, but it was basically an instant win. It was one of the easiest trades I've done in forever. And this is something that Charting Man Dan at the Chart Guys talks about all the time, which is recognizing relative strength versus relative weakness, which is why I came up with that other indicator I mentioned, which I will be releasing at some point for free on my TradingView account. It's money in the bank, right? You're just looking for, I'm expecting there to be a bounce. I don't think we're just going to go down all day long. There should be some kind of bounce. And so we bounce. And look, where did we bounce to? Well, if you pull in my other indicator here, YLOD is the purple line. We stopped at exactly yesterday's low. It makes sense. You gap down. When you move up, price wants to fill gaps, and there it filled the gap. So I actually got out as soon as it touched yesterday low of day. I sold a portion. Then when we came down here, tested the daily or the 2-minute EMA 12, and then went up again and failed to get above. That's where I exited my final position, and I didn't trade it again. And that doesn't matter. I got the move I wanted. I don't need to catch every move in the market. I wasn't expecting us to rally out of there and go back to all-time highs. I just wanted to get my piece of the pie, and this was a method that allowed me to do that. So wanted to share. Okay, this is it for me. I will see you guys in 2 weeks when I'm back for the week ahead. And in the meantime, I wish you happy trading and good luck. Hey, if you like my indicators on TradingView and you like the content I'm producing here on this channel, please remember to like and subscribe.